Ladies and gentlemen, it is time to set the tone for the day with the theme presentation on India's FTAs catalyzing competitive investments and manufacturing growth. I now invite Mr. Prashant Agarwal on the stage with a round of applause, co-founder of and partner Wazir Advisors, to please deliver the presentation. Can we have a round of applause, please? To briefly introduce, he brings with him nearly 3 decades of rich experience in corporate strategy, business creation, and diversification within the textiles, apparel, and retail sectors. He has worked extensively with both Indian and international clients with a strong track record in management consulting and the skilling industry. Mr. Agarwal is known for helping companies envision and strategize for the future. I now hand it over to you, sir.
Good morning, all the honored guests present over here. Thanks OGTC for having us partner for so long, and we planned this quite in advance. And we are always with Tony Opal ji, Kapoor Saab, earlier Kesar ji, and the whole management of OGTC. I think this is one conference where we have multiple round of discussions to finalize the theme, who can be the speakers, what we want to present. So it's a very intensive kind of discussions before we finally come up with this. And this time also we are able to have very good speakers whole day long, and we will be able to deliberate the topics which really matters to the conference. Thanks to my team also for working really hard to ensure that everything happens online. With this, I think the topic we are talking today, India's FTA catalyzing competitive investments and manufacturing growth. So, while we are sitting at a time where, because whatever has happened with US, we are in turbulent times, right? And when I was in conference last week before, in one of the financial, like a lot of financial investors who were there in the conference, so 2 days conference, I was presenting there. We have one round of discussion, one-to-one with all of them. And they were saying that still, whatever Trump is doing, market has not crashed, retail sales is still up, imports is still happening because of one big reason, what they call Trump as taco. Trump always chickens out. So they believe that whatever he says, over a period of 1 odd month, sometimes week, 15 days, he will say, okay, he will just change his terms. So whatever he says will not stick to it for long, right? And that's what we have seen. So again, I think for Russian oil tariff, he is again trying to find out how can he chickens out. But how fast is what all of us are expecting. So I think with all the discussions with Indian government is doing, what Trump administration, there are mixed signals, there are positive signals. First, let's understand in terms of what kind of FTAs and this trade, actually, whatever you say, lot is also governed by FTA. It's not only FTA, I will talk about numbers, but lot is governed by FTA. Suppose US has this CAFTA arrangements, these are the FTAs which we are showing. US has FTA with Central America regions, then Morocco, Jordan, Oman, AGOA has been in place for so many years, Australia, Singapore, Japan, some part of EU. So I think these are some of the FTAs which US already has. Now if you talk about these, already these FTAs exist. So we have US which has different FTAs, EU which has different FTAs. So it's not that all FTAs are common. Every country, depending on what kind of trade they want to do, are doing different sort of FTAs. And that has been in existence for long, but now with Trump coming in, with putting tariffs, the FTA negotiations have really started taking pace. I would tell you, one of the positives, what happened with Trump tariff was, and is, that UK, which was pending for 3 years, got signed. Ratification is pending, right? EU, which we were expecting will happen in another 1 or 2 or 3 years, is going to happen this year itself. So, again, India has signed FTAs with Australia, with UAE, with Japan already exists, Korea exists. So, these things have been expedited. New Zealand, I was seeing in newspaper today, shortly FTA will be. It's not a big market, but FTA will be signed. So, I think that is again FTAs has taken pace because what Trump did. Then we have FTA. When we talk about Japan, these are the FTA which Japan also has. Now, these are three big markets: US, Europe, UK, Japan. Now, let's understand this slide. I always show so that it's a reminder to all of us. We are sitting in an industry where global trade is around $900 billion. So, even if, like we say, 15, 16, Baguji talked about $16 billion of garment export, 537 billion is the global trade. So we are almost nowhere. Sorry, we have to go back. Yes, so 537 billion is our garment exports, $117 billion is our fabric, 48 billion is our yarn, 36 billion is global trade of fibers, and home textile is $58 billion. 97 is others technical textile. So it's a huge industry. Somebody who wants to set up good scale productive factories, you have to target. You have to see beyond US, UK, and Europe also. I'll talk about those numbers, but it's a big market of $900 billion is a huge trade. Now, again, see in terms of major exporters and major importers. China, when we talk about so much about China, it's 33% share. It's a huge $298 billion. $300 billion is total export of China. Out of this, around 160 is garments and rest is textiles. So 300 billion is a huge market out of 900 billion. 33% is the global share of China. Then we have Bangladesh 6%, Vietnam 5%, Germany, Italy, India, Turkey. So these are major players, exporters which are there. Then you talk about major importers, US which we are talking about is 13%. So the way you say 13% is big, second way to look at it, 87% is available to you, right? Which is nothing is impacted. But I won't say it's easy to shift over from one country to other, but that's a market which is available. US is 13% of global trade. Germany 6, France 4, Japan 3, China imports $31 billion. Italy 3, UK 3. So this is how it stands. These are the kind of major importers which are there. Now, I think this is again an important slide to understand. If you see US market, let's see from a US market perspective. So out of $102 billion imports in 2024, only 18 billion or 18% is through countries where they have FTAs. Rest, what we are saying, 84 billion is with countries where there is no FTA. It's only competitiveness of the countries which matter. So I am not talking about last 2-3 months. This has been the trade. $84 billion is supplied by the countries where no FTAs. You are competitive, you supply. And see the impact. Today, China, out of this 102, China does $28 billion. Vietnam does 16. So China and Vietnam together, because there is a lot of similarities, you would say almost $44 billion. It's a huge number here out of 102. Then we talk about Bangladesh, which is 8 billion. India, again around 9 billion. Kenya, again Africa. You see, Africa, Goa has been in place for last 2-3 decades. Nothing has happened. Egypt, Tunisia, Morocco, which are near to Europe, they are supplying. But other than that, whole of Africa could do with, they can export anywhere duty free in the world. They could do $1 billion, that's it. $1 billion. So we talk about Africa. So Africa is not the destination of the future. People will talk about, buyers will come, they will run away from Africa. But we know to be competitive, you have to have right ecosystem, people, efficient workforce. The people don't want to work, you can't put up garment factories there. So Africa definitely is not the destination. So CAFTA countries, 80%, when we say Honduras, Nicaragua, Guatemala, Haiti, so all of these are there. My friend from Bendix are there, they are put up in Haiti also. So there are like Pearl, they are put up in Guatemala. You go and talk to them, you'll understand today when they are talking about 3 billion, 2 billion, they can't go to 6, 7 billion even. There can be addition of 0.5 or $1 billion max. There are huge issues of infrastructure and workforce there. So you can't expect this 18% to suddenly go to 30% because it is near to US. No. So ultimately, the supplying countries, other than these which are there because of these FTAs, Jordan, Tunisia, then you have Kenya also, and then you have CAFTA countries. Other than that, for US, which will be the countries? China, India, Bangladesh, Indonesia, Vietnam, Cambodia. So buyers are only talking about these 6 countries. See, these 2 billion, 1 billion, 4 billion, 3 billion will keep happening. But the countries which have the supply chain are these 6. And within these 6 also, India and China, which are completely having a complete supply chain. You can't compare India, China with Bangladesh, Vietnam and Cambodia. They are garment manufacturers majorly. They are expanding into textiles, but majorly their strength is garment manufacturing, efficiencies, productivities and scale factories. So in times to come, why I am putting this perspective, because we always say, is business going to shift? No, they have to come back to you. The only thing is, we as companies have to see that why we are where we are. Why we are 16? Why can't we go to 20, 30, 40, 50 fast? I think these times what has happened has asked us to look within, and we will come out of it very nicely, and it's a matter of 1 or 2 months. Yes, it's a real tough time, I'm not denying the fact, but we'll come out of it very fast. Because that's where the scenario looks like. Neither buyer has an option to go anywhere else. That's why one can debate about it, that where this 16 billion is going to go. No, this 16 billion is not going to go anywhere. Where the FTA being signed, this 16 is going to become 30 soon. So that's how it's going to happen in times to come. So this scenario is what I wanted to just put it across so that everybody is aligned on that. I have more, like again, to tell you the truth, it's not that I am giving a motivation lecture here. It's actually the facts being presented, and that's how we have to look at the industry. That's what I am supposed to give here. EU market, again, just see, EU has an FTA with, not like US. EU has an FTA with our competitors, like, Pakistan, Sri Lanka, Bangladesh. That's why if you see FTA countries, EU is almost 56%, 58%, right? So EU has that FTA, EU has that, but the good part is that the difference is 10% only, 9.6% between India and other partners. So it's not like US. If you have an FTA with US, their duty range from 4% to 32%. UK is all, Europe is all 12%. So India has that 20%, so 9.6% there. So we have, like if you see how Europe is getting supplied, EU is getting supplied, Vietnam 4 billion, Bangladesh has huge advantage. See, they had zero duty, lowest labor cost, and everybody capitalized on that. 85% of Bangladesh export is garments, vis-a-vis India, which is less than 10%. 85%. So country is dependent on garments. People work, people just come to work, they can't take even few days leave, because how they will eat? I have been into Bangladesh last week for few days, and the kind of, like, they work like machines out there, because that's what the dedication of people, workforce out there is. So Bangladesh is 19 billion, China is 29 billion, so we have Pakistan, which is majorly home textile, is 6 billion, Turkey is duty free 4 days anywhere in Europe, $10 billion. So I think this is where Europe stands. So today when we are talking about UK having FTA and Europe also getting it signed, I can tell you it's not cakewalk there. Yes, we can double. I'll talk about that, how we are going to double, because the advantage with us is we know these buyers. We have long-standing relationship with them, so we can increase gradually the exports to them. But 58% is already with the FTA. So you are not going to become more competitive. You are coming at an equal platform, right? So that's again something with Europe that we have to see. Then again, US, Europe, I have covered major markets. Now let's talk about India. India has FTA with Japan. Again, I think Animesh ji will talk more about it. He has been supplying to Japan. We have just ignored Japan for long. $25 billion market. We really have to put our systems and processes in place to target Japan. $25 billion market. And we are around 400 million. We are not even 1%. 1% where we have zero duty to Japan. So Korea, yes, Japanese is not easy to invest. They take time and then you have to do some partnerships. They'll tell you know-how. Then only Japan is possible. Japan is not a cakewalk. Australia we have signed. Korea we have. UAE we have. UK getting ratified. EFTA is already there. EU might get signed. USA under discussion. So I think with all what has happened recently, we are almost covered. It's a matter of next 6 months. You will find all, even UK getting ratified, EU and USA, like all will be covered. So I think we need to get ourselves prepared for this. New Zealand, again, we are even talking. It can be done within few months. So just to give you an example, I just put an example in perspective here. So if you see in home textile between India and Pakistan, as an example, if you talk about trade share of Bangladesh, India and Pakistan in EU market, right? So Pakistan, Bangladesh has duty-free access. EU market, suddenly if you see Bangladesh, India, Pakistan, so Bangladesh has the highest share in apparel. In sheeting, if you see, Pakistan has how much? 60% share. And towel, Pakistan has 44% share, while India has 15% share and 8% share. Same way, because we have large scale capacities in towels and bedsheets in home textiles, we have players like Welspun, Trident, Himmat Singha, Indocount. If you talk about US, where no duty advantage to anybody, the scenario is reverse. India is 55% in sheeting, towel 41%, Pakistan is not even half of that. So that's where we say it impacts the whole trade. Apparel, Bangladesh, again in like 21% share. So I would say if there is no duty, India is almost 55-60% in home textiles in US. There is a duty advantage. Pakistan is almost double, more than double in Europe. Once we have duty advantage, same big companies will start making inroads into UK and EU also. So it has to be level playing field, and that's what FTA does to all of us. So FTA creates favoritism, that's what we would say, and that's what it is designed for. But I think maybe we were very slow earlier in negotiating FTA. We were liberal in giving away lot. Okay, give it to Pakistan, doesn't matter. You asked with us, right? We said no, they're in trouble, like they had floods. They said give it. But again, they took our market completely. So I think all of us have to really understand the importance of FTAs, and government has to understand that FTA in a cost competitive sector like ours really are the driving factors. When nobody has FTA, it's fine. Everybody has 20% duty, is fine. But when you create differentials, it's a huge issue there. US tariff, I think all of you are there. You understand how from April 2 till 9, this stage, how tariffs changed. April 9, we were thinking we were the most favored. India was at 26% and Cambodia and Vietnam were 46, 49. Suddenly scenario changed in 26, 7th August. We were placed at 50%, 25 plus 25, and others are, this is where we stand. India is on the top. We don't want to be on the top in this case. China, Bangladesh, Vietnam, Turkey, Cambodia, Indonesia. So others are 19, 20% and the competitors, and we are at 25 plus 25, 50. So I think while our finance team all are saying 25 will go away by November, 25 further will come to 15. 15 is what we are talking about. I think this is what nobody knows, but again we have to go with what government is saying. We'll remain at 15. and not even at 25. So let's hope for that best, what they are actually quoting there. So I think these are turbulent times. All of you are exporters. You know day to day more than what I am presenting in this slide, that whether some of the buyers are increasing retail prices, optimizing sourcing from high tariff region like there. Some are moving to Bangladesh, some are moving to Vietnam, but to whatever the capacities which are available. Ask manufacturers and exporters to bear the cost. Major part, they'll start from top. Okay, you bear all, then come to certain discussions. Then, so I hope these are short-term discussions, because even Europeans have started doing these discussions. It's not that US, it's a European companies are also starting doing these discussions. So exporters face uncertainty. Yes, by till 27, all the shipments were rushed, and you would see that almost every exporter, like so many, average between 25, 10, 15, everybody exported more, but you can't export more than capacity, so you can't suddenly say that rush your shipments, but there is, but I think in short term there is a huge profitability pressures which will be there with all manufacturers, because it's not that you are running on, like, your EBITDA margins are 10 to 15%. Suddenly somebody asking for that discount, everything goes away from your EBITDA. So I think it's a tough time from that. Softer market demand in US. So I think this is a point of worry. If because of whatever the situation which is created, suddenly consumer starts buying less, the demand goes down. So whatever price negotiation even we are talking about, it will impact our exports, because buyer is buying less. So that is that can be temporary about for 3 months, but I think soft market demand uncertainty might be more worrisome, is what I am thinking about. So I think this was US. I think let's talk about beyond US, where do we stand? Just to give you this one slide, think through it. US, which we are talking so much is, and we have been targeting for so many years, they are big buyers, 102 billion, 84 apparel, 18 home textiles. EU is $97 billion. Japan is $25 billion. China is 14, Korea 13, Canada 12, Australia 9.5, Switzerland 9, Russia 7.9, UAE 6. So how do we target these markets? Where India's share, you can see, is how minimal in all of these markets. So, but in certain segments, in certain areas, our share is more, that we have highlighted with more than 10% share. I think we can consolidate there. Where share is between 5 to 10%, we can expand. Where share is less than 5% is what we have to explore. I think on these, and these are not simple numbers, we have to really relook, think. These are all buyers there sitting out there. $595 billion is what we are talking about, including home textiles here, and 537 of. So 84 is there, but here 537 again, to keep reminding you. I think this is important part. We have to relook at different markets, which are big markets, and these are all welcoming markets for us. I'm not saying it's easy to penetrate, but yes, this is what these tariffs have done, that you have to look beyond these markets. And I would say, just in terms of consolidation, expansion and exploration, I think my estimate, we have done this, I have not shown you all the mathematics behind it. We have done all calculations in terms of segment wise, product wise, what kind of share, where India is competitive. Assuming that we only increase share where India is competitive, I think we have a chance of increasing 15 to 20 billion dollar. So 15 to 20 billion dollar means more than what we have been doing till now. So the only thing is, we have to really look into markets, and I would not say the strategy will be take your batch samples, go to these buyers. We have to have, and that's what OGTC and APC has to see, honestly, is that country level strategy, sir. That this country, again, it doesn't start with a only roadshow. So country needs to understand these are the products. Whatever you are making, is not that you are trying to sell there. So we are an industrial engineering factory. I always say so many times, we are garment, let's not typify us with, okay, I make this. We have machines, we have people, we have industrial engineering factory, we can make anything. If we have fabric, if we are buying fabric from India, we can buy fabric from outside also. We have to relook, rethink in terms of how garment industry needs to work completely. So with this, I am not talking about huge share. Just saying 15-20 billion dollar more export out of these countries, talking about where we are strong, where we can explore, where we can expand. Is this what I think this is what strategy means, and this is what has to be relooked. So in the end, I think we have to talk about short, medium, long-term perspectives. We can't be just cribbing about short-term and say that this has happened, now it's gone. So we have factories, we have people who are ready to work more efficiently, we are ready to work hard. In tougher times, we have seen always Indian factories, Indian people, they come out best when they are pushed to the wall. I think this is the time for us. Definitely short-term, manage tariff shock, preserve buyer relationship. You don't want your buyers to go away, discount, negotiations, finally saying yes, no, some you push, some you attract. So all these haggling, everything is gone for short term, preserve buyer relationship, optimize your cost. When you are giving this, there is a cost scope. Right? I'm a consultant, like I've seen all factories, hands-on. There is a scope of cost reduction. I think there are people who are hands-on also sitting over here. It's not the promoters only. So you have to look within that somebody has to give discount. How do I cover that 10% from your factory? And definitely, I can tell you every factory can cover 10%. Every factory without doing a gap audit. So optimize cost, short term, medium term. We are talking about diversification to new FTA markets, focus on environment compliance. It's a separate topic itself. You can't get away with that. In your short term strategy, not I'm talking long term. Short term strategy, this environmental compliance has to be in place. This is future. This is going to strike you now. All traceability, everything now. Then digitization of the process, automation. We keep thinking, we think deliberate too much, I think it's time to act. This is what is for us. Product diversification, I told you, if we have good relation with Russia, why don't you make winter wear also? We import fabrics, we are converters. Let's not glorify, we have machines, we have people, convert. So product diversification, all this is medium term, long term. Definitely we need to be a multi-country presence. You talk to all buyers, every buyer is saying yes. You have to diversify. In today's world, in global situation, you have to diversify your risk. I'm not saying your 50% goes somewhere. So even if you are present here, you need to have presence in Bangladesh or Indonesia or Cambodia or Vietnam. So these are the countries you have to see that if in those times how we diversify risk because of the duties, because of geopolitical situation, some tension arising somewhere. So business should not stop. So I think multi-country presence is must. Build scale and integration. I think with so many like PM Mitra Parks, policies of state governments, we have to look beyond. We can't be working on small factories and keep thinking it will keep working the way it has been. It will work, but I think a good rethinking is needed here. Build scale and integration is what. So this is what my request to all the people sitting over here. Will spread this word. Like I think whether short, medium, long term is what we have to plan, and everybody has to contribute. It doesn't only has to come from the top. These are tough times, and tough times need tough measures. That's what I can say. Thank you. Thanks to all of you, and let's have this conference.
Thank you so much, Mr. Prashant Agarwal, co-founder and partner, Wazir Advisors, for setting the context so well. We extend our sincere gratitude to you for your insightful presentation on India's FTAs catalyzing competitive investment and manufacturing growth. Your perspective has enriched the understanding of how trade agreements can shape the new opportunities for global competitiveness. We truly appreciate your time and expertise that has contributed to this session. Thank you. Ladies and gentlemen, we will now proceed for a break for tea. May I request you to please reassemble in the hall in half an hour at 11:30 for the next session.